viewers, I need to cut across. We have the SBI Chairman speaking.
Media to this important gathering. We are here today to share the financial results of State Bank of India for the Q1 of the financial year 27. It's my privilege to welcome on the dais our esteemed Chairman, Shri Challa Srinivasulu Setty sir, and our respected Managing Directors, Shri Ashwini Kumar Tiwari sir, Shri Rana Ashutosh Kumar Singh sir, Shri Rama Mohan Rao Amra sir, and Shri Ravi Ranjan sir, along with our Deputy Managing Director of Finance, Shri A.S. Paul sir. I also extend a warm welcome to the Deputy Managing Directors and senior officials of SBI who are present with us this afternoon. We sincerely appreciate your graceful presence. आपकी आभामयी एवं गरिमामयी उपस्थिति के लिए कुछ कवितामयी पंक्तियों के साथ आपका स्वागत करना चाहूँगा। तिमाही गुजरी हर कोशिश कमाल है, तिमाही गुजरी हर कोशिश कमाल है, इरादे बुलंद हैं, प्रॉफिट बेमिसाल है, बिजनेस बेमिसाल है, नतीजों की इस खूबसूरत
We'll cut straight back to that SBI presser, but essentially the stock is perked up 3% and you're seeing some very decent moves on the back of the numbers that SBI has clocked. It's a solid set, 2.3% QOQ growth, 18% YOY growth on the loan book, even though CASA hasn't grown much. And that seems to, in some form or shape, impact margins. We'll go straight across as and when Mr. Setty starts speaking. In fact, let's cut across. I believe, okay, so we'll just cut across as soon as he starts speaking and we'll get a sense of what he's making of the SBI numbers and what we can expect. Okay, we'll continue to monitor that SBI feed. Okay, let's go across.
Every quarter provides us with an opportunity to present our financial performance, but more importantly, it allows us to share the strategic direction in which the bank is moving. We have always believed that beyond numbers, quarterly results are also the outcome of sustained investments in people, technology, customer relationships, and prudent risk management. Before I take you through the highlights of our last quarter performance, I would first like to share our perspectives on the evolving economic environment and the initiatives we have undertaken to position the bank towards a sustainable long-term growth. The global economy continues to operate in an environment of heightened uncertainty. Geopolitical tensions in West Asia remain a source of volatility, while renewed trade measures by the United States have added another layer of uncertainty to global commerce. Crude oil prices, exchange rates, and financial markets continue to respond sharply to geopolitical developments and changing global expectations. Against this backdrop, India's economic resilience continues to stand out. With respect to the banking sector, credit growth has accelerated across key sectors, supported by healthy demand from retail, MSME, agriculture, and industries. Capital adequacy, liquidity, and asset quality across the banking system continue to be remaining comfortable, although some moderation in margins has been witnessed across the industry. Overall, the Indian economy has performed better than expected during the first quarter, and we remain confident about its medium-term growth prospects. At SBI, our strategic direction continues to be guided by a simple philosophy: digital first, customer first, and nation always. These guiding principles shape every investment we make and every initiative we undertake. During the quarter, we continue to simplify banking by expanding our flagship operations process re-engineering project called Project Saral, with the objective of making customer journeys faster, simpler, and more convenient. One important milestone has been the launch of our digital re-KYC journey, enabling eligible customers to complete KYC updates through a seamless digital interface. We have also continued to strengthen the YONO ecosystem by introducing new digital journeys. Customers can now open a savings account along with a demat and trading account through a single onboarding process, further aligning our digital platforms in line with changing customer aspirations. We are adopting artificial intelligence in a purposeful and responsible manner across all facets of banking. During the quarter, we introduced YONO G, an agentic AI-powered virtual assistant on YONO Business to provide our commercial clientele with round-the-clock support. We also expanded WhatsApp banking services to our current account customers and strengthened the digital capabilities of YONO Business by integrating our trade finance suite, including the use of artificial intelligence in trade finance operations. Our efforts to improve credit delivery is a continuous journey. We have extended our business rule engine, MSME Dream, to cover SME loans up to 10 crore rupees, enabling faster and more consistent credit decisions without compromising underwriting standards. In agriculture, we have expanded digital document execution across the nation for Kisan credit card and agri gold loans, thereby reducing turnaround time and improving customer convenience. Technology is equally transforming the way we manage risk. Through Project Prism, our predictive stress monitoring platform, we are leveraging internal and external sources to identify early signs of stress in borrower accounts. This strengthens our ability to take timely corrective action. Our objective is to remain proactive in preserving asset quality. Collectively, these initiatives are helping us build a future-ready institution. Coming now to our key numbers, I am pleased to share that our net profit for the quarter stood 21,121 crore rupees, registering a year-on-year growth of 10.23%. Our operating profit increased by 9.77% to 33,529 crore rupees. Return on assets remained healthy at 1.11%, while return on equity stood at 17.87%, comfortably above our long-term guidance for the last 16 quarters. Our operating efficiency also continued to improve during this quarter. Operating expenses remained well contained, leading to further improvement in our cost-to-income ratio. Our domestic net interest margin improved sequentially, reinforcing our confidence in maintaining our guidance of 3% for the financial year. Our balance sheet continues to expand on the strength of customer confidence. During the quarter, our total business crossed 110 trillion rupees, with deposits exceeding 60 trillion rupees and advances crossing 50 trillion rupees. Our domestic business has grown by more than 11.6 trillion rupees on a year-on-year basis, while our overall balance sheet has crossed 76.6 trillion rupees. Deposit mobilization remained healthy in an intensely competitive environment. Total deposits registered strong growth of 9.73% year-on-year, supported by robust growth in retail term deposits as well as savings bank deposits. Our CASA franchise continues to remain among the strongest in the banking industry, reflecting the enduring trust that customers place in SBI. Our overseas operations recorded healthy growth in deposits. Credit growth remained broad-based across all major business segments. Agriculture, MSME, corporate, and retail advances all recorded double-digit growth, while our RAM portfolio continued its steady expansion with a year-on-year growth of 18.2%. Our overseas operations delivered healthy growth in advances, having grown at 21.38% in rupee terms, underlining the diversified nature of our franchise. One of the most satisfying aspects of our performance continues to be the sustained improvement in asset quality. Our gross NPA ratio has declined further to 1.47% and is now at its lowest level in more than 2 decades. Net NPA at 0.38% and credit costs at 0.27% have also improved, reflecting disciplined underwriting, effective recovery mechanisms, and continuous strengthening of our risk management processes. Our provision coverage ratio at 74.2% remains robust, providing additional resilience to the balance sheet. The bank also continues to remain well capitalized, with capital adequacy and CET1 ratios comfortably above regulatory requirements. This provides us with sufficient headroom to support future credit growth while maintaining a strong capital position. Digital transformation continues to be one of the defining strengths of SBI. Today, the overwhelming majority of customer transactions, almost 99%, are conducted through alternate channels.
All right, that's the chairman of the State Bank of India, and that's on the back of the numbers they've come out with. You can obviously be updated with regard to everything that he's saying. Flashes will come at the bottom of the screen as and when he says or provides his guidance. Secondly, we'll cut across to him, of course, as and when he says something which stands out in terms of commentary. But let's quickly move on. Siemens Energy is the other one. A strong first quarter reported, profitability beating estimates despite a slight revenue miss. Brokerages retained their positive stance, citing the kind of margin strength that was shown and the execution that was shown. Sunidhi here with the highlights.
Siemens Energy India reported a strong Q1 for FY27 with EBITDA and profit numbers comfortably beating the street's expectations despite revenue coming in below the street's estimates. Revenue grew by 13% YOY, while EBITDA surged 72%, while the company's EBITDA margins reached a point of 23.6% for the company during the quarter, while its profits jumped 68% year-on-year. Growth was broad-based across both businesses of transmission and generation. Power transmission revenue increased by 42% year-on-year, while power generation grew by 36%. This highlighted healthy demand across the power sector. Following this strong performance, Motilal Oswal maintained its buy rating and raised the target price to 4,100 from the earlier 3,950, while Nuvama also maintained the buy rating and raised the earnings estimates while reiterating a target price of 4,200, citing faster execution across the business and sustained margin strength. Overall, it was an impressive quarter for the company. While revenue did miss the expectations, the sharp margin expansion and strong earnings growth more than made up for it. This has reinforced confidence in the company's long-term growth outlook.
Okay, all right. Thank you so much for that, Sunidhi. We'll slip into a very short break, come back. We'll be joined by Rajesh Palvia. Kunal Bothra still with us, but we'll be joined by Rajesh as well. We'll quickly start taking views. Of course, we'll have one eye on the SBI presser. There's Hindalco's numbers flashing on your screen. That 4,784 crore profit looks far stronger than expected, even though revenue looks like a bit of a miss versus estimates. 35,000 crore is where the top line number was expected in at. It's coming at 30,000 crore. The EBITDA number has come in just shy of 7,000 crore rupees. Broadly, that's the texture. Margins at 23%. We'll take stock of that as well on the other side. Stay with us.